Good evening. Today is Friday, February 19th. S&P 500 tested 3890 overnight and ran up to open up with a slight gap today from yesterday's close. And then it traded in a tight 10-point range only till about noon, only to sold off 30 points and close on the low just below 3900 level, down 11 points. Nasdaq was down 64 points, and Russell was finally back to its former glory and closed up over 2%. Oil was down 2.5% today as Texas is still recovering from blackouts. Apparently, their power plants were not built for these weather conditions, but for the opposite conditions. So all of those 95% of the scientists that agree on the global warming didn't really think about what a few days of local cooling can do to our country. Some people who are on variable plans in Texas and usually pay a few $100s for electricity apparently got hit with thousands of dollars of billing. Like, for example, one person usual bill was $400 and now it's $8,000. Bonds made new low today as 1.9 trillion spending bill was finally released, and it includes the controversial $15 minimum wage hike that Biden said it wouldn't be in, but it is for now. And of course, Bitcoin made new highs today of 56,000, up 8%. And the market cap of Bitcoin now is over $1 trillion. I'm sure on this news, it's going to go to 60 over the weekend. And this makes Bitcoin the 8th largest asset in the world. It overtook Tesla, which has been stuck under $800 lately. Musk better tweet something clever really soon, or the shorts are going to put those shorts on. And of course, PMI data was released today. And the notable highlights from it were input costs across manufacturing and services were rising at by far the steepest rate since the data was available, 2009. And as a result, the firms have raised their prices at the sharpest rate on record, again, since 2009, by passing through the costs to the clients. But I'm sure Mr. Powell would think that this is all transitory. Even Michael J. Burry from The Big Short was referencing hyperinflation in Germany in 1920s. And finally, for the fun news of the day, AOC is calling for the investigation into Cuomo's administration handling of COVID. Should be fun infighting. And Biden today promised that after we have beat COVID, we're going to, and I quote, end cancer as we know it. I don't even know what to say about that promise. Good luck, I guess. Victor, what do you have for us today?
That we're in a new habitat. We've had a new species that's come into the firmament, the cryptocurrencies, and gold remains stuck in the 1700 level. Bitcoin goes up, broke through the Soji level, and doesn't appear to be stopping. We had a typical day today, opened way up on the expiration, but then we gradually sold down to the round number. Now we haven't had a new high. This is not cricket. We haven't had a new high in 6 days. But the new habitat includes bonds which have come down from 80 to 63 handle. They're just above 163. So that's what we would call a bear market if we were a technician. Getting the long rate is now 2.15%. It's getting to worrisome levels, and invariably 80% of the time the bonds and stocks move opposite directions. When stocks go up, bonds go down, but today they were both down. We had another red day. I think one of the lessons that I've learned is when you have a unusual period of success or luck, you should call it a day. And I think yesterday we covered so many different points, all the duplicities, all the gravitational approach of the round numbers, the tendency for the expirations to open high, the bonds going down. So I think we shouldn't gild the lily anymore. We're definitely in a new habitat, and all the public should change to it as if there was a volcano or a flood, new species that's come onto the scene. Certainly the new habitat includes unlimited spending. They're talking about earmarks coming back. We're joining all the climate change. We had a sort of woke day. Everything coming from the progressives is more and more progressive, more regulation, more involvement in global agreements. We're committed to spending trillions of dollars to bail out other countries. Today's words are pork and log rolling, and earmarks. That's all I have to say. But we've gone a long time without a new high. Should be ready to, after perhaps a down open tomorrow, we should be ready to go back up. Stocks have a 50,000-fold a century drift. Until bond yields get to 2.5%, they shouldn't stop the upward trend in stocks.
Well, I have a quick follow-up question. Speaking of the drift, we discussed Japan yesterday, and I got some follow-up questions from our listeners about it. And some people seem to be concerned that we right now could be in the situation like Japan in 1989 at the peak when there was no drift for 30 years. So the question, I guess, is, do we know where we are in that cycle? Maybe we are Japan in 1989, or there is no way to know and you just have to buy and hold.
That's right. Just buy and hold, and don't worry about ridiculous anecdotal selection of the highest point. I think it was very bullish today that the Nikkei closed in the 31,000 handle, stayed above 30,000. The German markets were quite strong today. There's always something bearish. How many times have we mentioned that? You can always point to something that's worrisome. The more worrisome it is, the better it is for the market.
Well, and somebody also pointed out that QQQ or NASDAQ had the same returns as SPY if you go back in time and you start from before the 2000 bubble. So I guess it depends on timing and where do you start measuring the returns.
Well, that's why you should take all 10-year and 20-year periods. It's true if you start in 2000, you can find an equivalence between NASDAQ and S&P, but the general principle that returns on growth stocks are higher and that compounding makes the terminal value of growth stocks much higher than the value stocks if you look at it over a 5 or 10-year period. And it's absurd to pick out a high point and a low point and compare that. And the fact is that in almost all 10-year periods, the stocks are up, and for every period that it's for every period that it's down 10 or 15%, it's counterbalanced by a period that it's up 30 or 35%. And one shouldn't look at the highs and lows and try to draw some I did, there was some back and forth concerning whether there's any scientific evidence that buying the stocks that are up the most is a winning strategy. And I looked at all the SSRN papers on this, and most of them are from 2010, 2008. They're very rarely updated. You need an as-is file that takes account of all the stocks that are delisted and that have merged out of existence. But any reasonable strategy that takes random starting points and looks forward for 10 years will find that in 90% of the 10-year periods during the last 20 years, the growth stocks have done much better. They've gone down a few days in a row. Good time to buy them. It's always a good time to buy stocks when the Nasdaq is down. All right, don't worry. The more worry there is, the better, the more bullish it is. Buy and hold. Goodbye.